Executive Magazine. Independent thinking for the discerning mind.
If you think about the banking crisis in the US, I mean, who was buying all these mortgages, right? People were borrowing money to buy a house. They didn't have to have a down payment. So they were speculating on housing prices. When the price of the house went up, they were making money, and they used the money to get into a new transaction. I mean, there's many of these small people. People talk about the losses of the small people. A lot of small people make fortunes from 2002 to 2007 in speculating on housing prices. Now, when things went bad, who took the losses? The banks took the losses, because the people walked away from the obligation. They had not put up their own capital. And the real victims of the financial crisis were the banks or the bank shareholders. It's not the small people, because small people got a free option. They got a free option. You cannot prevent people from making mistakes. There's nothing you can do about it. But you can try to make sure that the taxpayer doesn't have to pay. And if people have mistakes, then they pay for these mistakes. And that's the way capitalism is supposed to work, right? You cannot get high returns with no risk. Someone should explain that to the world. This is a basic principle. If you want to take high returns, you have to take them all low risk. And then don't complain about it when you lose your money. Now, it turns out that the small people made a mistake. I'm sorry, at least the ones that are holding it for the short run. Yeah. But you should know better. I mean, if an IPO is a situation in which a bunch of people that know a lot about the company are taking a company public, right? They know much more than you do. I never buy shares in IPOs, unless if I can flip them on the first day, but usually they don't let you make them flip. I mean, it's tough to get in there. You need to be a good client of a bank. But the general rule is you stay away when a company issues shares, and you buy them when they buy back stock. People should stop trying to blame others for their own stupidity and their losses, right? It's kind of, I have no compassion with these people, I'm sorry. Rather than disallowing it, which is your proposal, then I prefer that it would be separate, and the people that want to do derivatives can do derivatives. You have to assume that all of these risky activities, if they created some value and you're eliminating them, then, of course, in your case, Lebanon, you were smart to have a regulation that prevented people from entering in this, and therefore is like Rabobank is a nice example. Rabobank is a Dutch bank that's very conservative, and they said we never want to go into this because this is not what we do. It's too complicated and whatever. And if you see, I teach for bankers, and the Rabobank are the least sophisticated of all the bankers in Holland. I mean, they're actually, if you're not very smart, you work for Rabobank. Why? Because the work is simple. Now, banks like ABN AMRO, we're having basically great. We're having basically great people, smart people went there, but they got into big trouble.